We have Feroz Aziz, who's the joint CEO at Anand Rathi Wealth, joining us to discuss more about markets and, of course, what's the outlook from here on from a long-term perspective. Feroz, good afternoon. So good to have you back. And, markets have been pretty much sideways. It's been oscillating between that 24,300 on the upside and 23,900 on the downside. Do you think that this is the new normal then?
I think the market can break out. Of course, on the probability that breaks out on the higher side is so much greater. A couple of weeks back, when I'd come on your show when the Nifty was at about 23,000. I've been, after the 26th February war, I've been maintaining the stance that in an oversold territory with a sideways movement of a year and a half, markets don't fall sharply. They fall 5, 8, 10%. That's business as usual. And that's been seen over the last 26 years. Every single year, market has done a peak to trough of about 14.5% average. And was not expecting too much of a correction, unlike most people who were writing articles of 17, 18,000 Nifty. And even an article which I read, 15,000 Nifty. So if investors read those pessimistic views and they sell their equity, they don't know what to do. One of those gentlemen has written a target of 32,000. I don't know what audacity would somebody have to write at 32,000. And if one of my investors had almost fallen trapped to that pessimism, to sell his equity. So maintain the stance that if you're an investor with even a 2 to 3 year perspective, beating FD, which is what I think the primary concern of any investor should be, because that's opportunity cost, is upwards of 90-95% probability. You get 90-95% probability seldom, even on a 3 year time frame. Beating debt is a near certainty from these levels.
Okay, got it. But if you had to make an estimate, like you earlier pointed out that Nifty can hit 32,000, that's of course a beyond an optimistic horizon that you have talked about. But if you had to scale back your expectations, and of course for 2026, what would it be?
No, that's not even my expectation. I'm just finding it very saddened that somebody who gave an opinion of 15,000 Nifty just turns around in another 2 months and gives a 32,000. So that's not what my target was. I'm just or giving you an illustration of how people can give you pessimistic views or optimistic views without any implication. But unlike an investor, who, if he is responsible for his actions, that impacts his net worth. So that's when 32,000 in that context I had mentioned. If you have to ask me, where do I see the markets? I think markets giving more than median return. Median returns are 11% plus compounded returns on Nifty is 90-95% probability. So if you ask me, 27, 28,000 by the year end seems on the cards. Why do I say so? Because there has been a lot of buying which has come from domestic guys. I do an algorithmic way to figure out what kind of cash balances do all the active funds currently have, which are upwards of 900 funds. They, in my judgment, the April end number is 2,09,000 crores of cash still remains with them. They started 1st April with 1,85,000 crores. In spite of putting 50,000 crores in the market, they still are left with 2,09,000 crores. So their cash pile has not got evaporated. So I personally believe that the market could be buoyant. That's what is happening. The news doesn't seem to get better, but the market seem to be at almost the peak after the war. The peak after the war was 24,500. We are at 24,100, just about 1.5% before the war broke out, which is 25,179 on 26th of February. I personally think we've analyzed 12 wars. Only one war didn't retrace back the levels. In the 11 instances where war happened, after the war was over, market went up almost 6-7% from where it started falling. And I would say this 13th, which is still to unravel, will be more like the 11, unlike the 10, 12, where 12th where markets fell, and they remained there even after the war had subsided.
Got it. Feroz, before we talk more about oil and of course earnings, what are your first thoughts on the early verdict which is coming in from the 5 state election results? It's largely a neutral reaction for the markets, but any key takeaways from a policy or an economic point of view?
Yes, there are quite a few takeaways from an economic standpoint. But before that, I was just looking at these state elections to not be one of the other party spoilers. Over the last 1 year, every time we come back on track, then there's some unpleasant surprise which puts us back, sets us back 1 step forward and 2 steps backwards. So we started the year, last financial year, with Trump's Liberation Day of 7th April. Then SEBI capped long positions in the derivative market, which really reduced the probability of short covering for the full year after June. That happened. Then you had the Trump war, which was trade war exactly on India in August, where we were gifted 25 plus 25% tariff before our Independence Day. then came the Iran war, then came the STT. So we've had party spoilers through the last financial year. I was just hoping that this does not become a sentiment dampener again, which is, I think, out of the way. Coming back from a political standpoint, I think the impact of this is just from a 2029 perspective, because there are 42 parliamentary seats in West Bengal. And if you see the kind of volatility, parliamentary seats of NDA from West Bengal have been 2, 18, and 12 in 14, 19, and 24 respectively. So this gives me some confidence that you would, in the 2029 election, you might just have 25 parliamentary seats, which is like extra seats where NDA can come back to power, and continuity is what markets love. So that's what it was a barometer for, point one. Point two, from an economic standpoint, there will be better, faster execution of projects because of the coordination between center and state. Industrialization is going to be so much more easier. Infrastructure development is going to be greater because there's ports and infrastructure also possible, because West Bengal is the gateway for the north and east. Fiscal prudence will be more, and the perception of law and order, which is also important when it comes to certain sectors like manufacturing and logistics, will have benefit. So there is going to be some degree of extra iota of contribution of economic benefit for the country from West Bengal because of this synchronized center and state for that region, which has not happened for decades.
Okay, got it. Feroz, now let's talk about oil prices, because it continues to remain above that $109 per barrel. But looks like the markets have largely priced in the negative news. But the question is that the longer oil stays above that $100 per barrel, more the pain will be felt by the India Eng. So does this mean, and do you think that that could bring more earnings downgrades into the picture?
I think, where does oil sit? A peak, trough will not matter. What will matter is what's the average price. In my judgment, the average mean closing of oil should be below $85 for this financial year. If that's the case, it will have an impact for sure, both on inflation, more so, not on earnings as much. But we are at, I think, if I'm not wrong, March CPI number was 3.12, down from 3.8. So I think since we are in the comfortable zone, if we were on a discomfort zone of inflation as per RBI, then this could have caused more trouble. But will it have pressure? Answer is yes. Will it have more pressure on the currency, which is what is the difficult part for RBI to handle currently? I think that's definitely something to watch out of. If there is something which I'm scared of, it's oil prices, and not just where it goes. Peak went to 124, 120. That's not a material difference. But what's the average price rolling? Is what I think it should be sub 85 for this financial year, hopefully. If that were to be there, we'll still be able to sail through.
Okay, got it. Feroz, earlier you were talking about the domestic investors, that you've remained largely positive on how much they have been cushioning the impact. But how long can they cushion the impact for the markets, given that FIs have largely remained net sellers, and India, among the other EMs, have also remained largely underweight in FIF portfolios?
See, yes. Can they keep pumping in money? As far as the math shows, yes, they can. Why do I say so? Is if you look at the balance, cash balance, when a mutual fund company, like last month, let me tell you the full total, they've deployed 28,000 crores, mutual funds alone, not DIIs. But they got a net flow of 54,287. Of course, these numbers are not published by Amphi, and so far that happens on the 10th of the month. But there are ways and means in which you can work backwards and find out how much money has come. Approximately 54,000 crores is the net flow in equity, including arbitrage. And if that's the case, and equity mutual funds have deployed only 28,000 crores, that means they've added to the cash pile by 26,189 crores. That's our estimate. That means, paise roz dalne ke bawajood, they have more money left than what they began in April. So technically, why has DII or mutual fund in specific been able to buy for almost a year and a half, where FIIs continuously have been selling almost on a daily basis, and these guys have been buying on a daily basis? Because India is a large country. India is getting 50,000 crores of net flow in equities, sensibly so. And SIP returns have been in positive in spite of markets. Lump sum returns have been -5. SIP returns in the same fund are 6-7%. So I think the retail investor is not so upset with the performance. If you've made 5-6%, I don't think somebody is going to stop his SIP because of this. Of course, there's a lot of churn in the SIP, but quite a few investors stop one SIP and start another in another fund house. So that doesn't bother me. The total SIP number is large, and the net flow numbers for this time will be a lump sum itself should be 15,000-20,000 crores. So can they continue to buy? In my judgment, yes, for the next few months, they can continue to buy. And I don't see any risk to net flows. My estimate for April, and you can hold me to it, by May 10th, you will have this number. Small cap funds have got 5,000 crores more. If the sentiment is too poor, small cap funds is the first things to get starts to get outflows. That's what you've seen in history. If the retail investor is very upset with the markets, the first thing he stops buying is small cap and starts redeeming from small cap. But the April provisional number from my computation standpoint is 5,600 crores in small cap net flow. That is a reasonable barometer of what the retail investor is thinking about markets and how displeased or pleased he is with his performance of the past.
Okay, got it. But do you think there's more fuel to this rally when it comes to the small cap index? Because they've seen a best monthly gain in the month of April in over a decade now.
Yes, so in several channels, if you saw me from 5th March, I went on a few channels, 9th, and so on and so forth. I've said during these times, people scare you saying that don't even touch small cap. They'll give you that conventional wisdom that be in large cap. But April, a small cap has given 19%. And that's precisely what I had said. When markets are down, don't buy specific sectors and stocks. Buy generic market. It is low risk and better reward. When the markets are very high, let's assume if tomorrow markets go to 28,000 Nifty, then you have to be very specific. कौन सा sector खरीदूं, कौन सा stock खरीदूं. You have to be more careful at peaks. You have to buy broader market during lower levels and specific markets during higher levels. So I am reasonably confident. How much ever pessimism was there in small cap over the last 1 year, small caps have not underperformed large caps after April, and they've been able to outperform Nifty over the last 1 year. So I think I'm not too worried about small caps. And will they deliver the 2-3% more than Nifty on NSE small cap 250? Quite likely. If you look at the top 25 weights of NSE small cap 250, I think you will share the same confidence.
Okay, got it. Feroz, let's talk about auto stocks. They've reacted well to their April sales data today. We've seen a broad-based growth, Maruti registering their record April sales. But do you think this demand can sustain when oil and inflation risks have cropped up?
I'm not too positive. I used to be positive on auto. Maybe one place where I went wrong also. Went right momentarily, but went wrong. Let me acknowledge that. I'm not too bullish. I would call this a little unsustainable numbers, especially given where we are headed.
Okay, got it. Feroz, I mean, last week we had Nitin Gadkari saying that there would be no future for fuels or petrol or diesel cars. So at a time when India is trying to pivot itself into an EV play, I mean, how should investors play this theme?
See, I think there are some narratives which you can't catch so easily because those are already done. They're priced in. Of course, it's not so easy to transition. It's a large country, very bad infrastructure for EVs. Everybody knows how difficult is it, even in metro cities. To run an EV as candidate might sound. So I personally think I'm not too bullish on playing that theme because you make money only if you have information which nobody else does. Mr. Gadkari is speaking to lakhs of people on the same screen. So unless you have something which the other people are not able to see, you will not be able to get something which is as a variable not priced into the price already.
Okay, got it. Feroz, I mean, there's a lot of optimism which is being built into the power stocks, not just because of the summer season, but of course, earlier we've heard them being as proxy plays of data centers. But several of them they've rallied quite a bit. So what's your sense? Is this theme an already overbought one, running ahead of fundamentals? And is it already at an overstretched scenario?
I think, yes, power is something which is overstretched. Basically, some of these sectors have very different kind of stocks. Some of the stocks are low free float. Some of the stocks are high free float. If you're getting into a sector which is not completely represented in NSE 500 and Nifty 50, I think being very stock specific is more critical than buying the broader theme, especially after the rally. See, before the rally, when they're down in the dumps, nobody wants to buy them. If you're buying it, if you're one of those courageous people who don't have recency bias and you buy something which has underperformed, then you can buy the full sector. But where it stands today, you have to be bottom up. if you're already recency bias is your largest reason why you're looking at that sector, where because of its past performance. So I think you have to be very stock specific. The entire sector can't be bought, and you can't make a high beta play out of it to outperform Nifty.
Okay, got it. So in the power space, which is something that you're liking? Is it the power generation makers? Is it the traditional players? What are you liking in this space? Renewables, for that
I'd say the
matter?
traditional players have a larger free float, and that's the place where I would like to have some. If I'm pushed to the wall to buy those.
A push to the wall to buy this. Okay, got it. Feroz, we had Mazagon Dog, Zen Technologies, all of them reported their Q4 results today, and the stocks have reacted negatively because of the higher expenses. And defense sector has been a favorite theme, but we have seen that execution has been a questionable mark. I mean, how do you think investors should approach this particular space?
See, any stock, I did a lot of study. See, when good results come or bad results come and the stock reacts opposite to what it should, it is largely because there are about 15, 20 of FIIs who front run a result. And those are the usual suspects. Of course, I know who they are. It's very easy to figure out. There is enough Bloomberg terminal. There's something called the security tree feature where you will know exactly who rose the stock or who made the stock fall. So I don't see result day or result couple of days movement as a reasonable barometer of the impact of the result on the long-term fundamentals of the business. Because there are 3, 4 FIs who build large positions to dump the stock on a good result day.
Okay, got it, got it. Any particular sector that you're finding attractive at the current levels, Firdaus? If you had to point out one.
See, B and C, banking and consumption. See, banking is 40% in Nifty and 36% in NSE 500. I'm reasonably confident that banking can outperform Nifty by about 3%, 4% per annum for the next 2 years. That's one. Consumption is about 10% in Nifty and about 8% in NSE 500. So these are reasonable representations as weights for these sectors. So these two sectors can definitely be looked at.
Okay, all right. Banking and consumption is something that you're looking at. All right, with that, we have to let you go, Feroz, but appreciate your time and thank you for joining us.